That's added another 10 and a half years of mine life. So now we have 12 and a half years of mine life ahead of us. And we've already secured 60 million US of the 130 million capex for that phase 2 expansion.
Welcome to the NEI 500 CEO interview program, where the senior management from select listed companies will share their insights with the audience about the company's growth potential. In this episode, we invited back Aneel Waraich, the Executive VP of Steppe Gold, to give us an update. We spoke first time back about 14 months ago. The company has a trading symbol of STGO on TSX main board. Steppe Gold is a gold-producing company with operating mine in Mongolia. A few highlights our readers should know before watching the interview. Steppe has commenced production since 2020. Its phase 1 oxide production is forecasted to produce 60,000 ounces of gold annually. Steppe recently completed a phase 2 expansion feasibility study, with the results being able to increase future gold production to 100,000 ounces per year with a higher gold recovery ratio. Steppe's low-cost gold production provides a good leverage to a rising gold price environment. Steppe's share price took a hit in the second half of 2021 because of its operation being affected by COVID delays. It was trading at $1.20 for a few months before more positive news now that the mine become back on track in full production again. It currently trades between $1.50 to $1.70 range. If you enjoy our video, please like, comment, and subscribe to our channel so you can stay alert of our future content. Hi Aneel, how are you doing today?
I'm good. Thank you, Gilbert.
Yeah, so thank you for joining us today. So last time was already about 14 months ago that we last talked. Maybe you can refresh a bit of memories of some of our audience here to give us a bit of an overview of Steppe Gold.
Absolutely. And thank you for joining and listening to the story for those who are new. Steppe Gold, we listed on the TSX main board in 2018, the only main board mining IPO in a very tough time in 2018. We raised $25 million at $2 a share when gold was $1,250. And we had the capex risk, finance risk, and build risk. 2 years later, we built our first mine, our oxide mine, a heap leach operation, and successfully brought it online in a very tough environment again. So April 2020, COVID around the world, borders were closed, and especially Mongolia was closed as a country. So very important to have a local team anywhere you do business. And we are lucky to have a Mongolian CEO, half our board are Mongolian, and 99% of our team are local. So we were able to, without any expats in the country, bring production online in April 2020, our first ever quarter as a producer. During startup and ramp up quarter, we've still produced 15,000 ounces at about $734 all in cost. So very successful startup, very profitable, high margin production from the oxide mine. Now, roll out about 12 months later, COVID still rampant, and supply chain issues were poking, showing their face, not to just the world, but to us in Mongolia specifically. So we did have some delays in acquiring key chemicals, reagents for our production. So essentially, for 9 months of last year, we only produced for a few months in 2021. We deferred production till now. We just restarted production. We have all our reagents on site. We've started production here in March with our first gold sale and gold pour at the end of March. What we've been luckily been doing is building up an inventory. So in the last 6 months, we've actually built up an inventory that's about 85,000 ounces on a recovered basis. So assuming 70% recovery on the heap leach for gold, we have 85,000 ounces that are in a way paid for, and majority paid for, mean mined, crushed, stacked on the leach pad, on the ROM pad, and blasted in the pit. So you have all this material ready to go, ready to be processed, which we're hitting the ground running in now. So a big year for us with the restart of production and cash flow. We'll look to generate between 30 to 40 million US of cash flow this year, even starting with, only having about 10 months of production, because we've done a lot of the hard work while we're waiting. So production back online, cash flow back online. That's on the production side. Over the last 2 years, while bringing the first mine online, which is an oxide mine from surface down to 40 meters, we also doubled the resource of the fresh ore. component. So we started with 1.2 million ounces when we bought the project. We're at about 2.5 million ounces, give or take, today, only down to about 400 meters. So still open at depth on all 4 deposits, and along this strike, a 20-kilometer mineralized trend that we can continue to explore. What that allowed us to do is put out a revised feasibility study on the phase 2 expansion. So the phase 2 expansion is already underway, and this will allow us to double our production profile from about 50,000 ounces from the oxides to about 100,000 ounces a year, plus, starting in 2 years from now as we construct it. That's added another 10 and a half years of mine life. So now we have 12 and a half years of mine life ahead of us, and we've already secured 60 million US of the 130 million capex for that phase 2 expansion. So in a long-winded update, we've accomplished quite a lot in the last couple of years. Some hiccups with the production, but production is back online, cash flow is back online. We're still cheaper than when we listed. Gold is 50% plus higher, and we've already executed and built a mine that operates and recovers the gold successfully at a very high margin, $700 give or take on all-in costs. So that's where we are today with the updates, if that makes sense.
Great, yeah. And I remember you talked quite a bit about your phase 2 expansion last time. So do you have all the, capital that you enough to achieve that progress in terms of the phase 2 expansion on your auto mine there?
Sure. So the phase 2 expansion today looks at about 130 million US in costs, capex. Of that, we plan to source 70% of that in debt, and 30% would be the equity contribution, or our cash flow contribution, if you look at it that way. So the 70%, we're not there fully. We received 60 million US sponsored by the Bank of Mongolia 2 weeks after we announced the feasibility study in October of last year. 2 weeks later, we received that investment and that endorsement from within the country. So that's allowed us to advance phase 2 in the background while waiting to expand the financing package. So by this summer, we'll have increased the debt package to about 100 million, maybe 110 on the high end, but hitting that 70% minimum mark for debt. So that'll be all done by the summer. And then the 30% component, so let's just call it 40 million US today, could be funded from future cash flows from the oxide mine and cash on hand from starting this summer. And we're already in production, so the cash will build up very quickly. So we are in a unique position to be able to self-fund through cash flow and debt the expansion to phase 2. And once phase 2 is online, you're producing 100,000 ounces at about $850 all-in costs, which also will be further refined to lower that all-in cost. But even on a base case, 850, call it $1,000 margin, that's 100 million US of potential cash flow in just 2 years from now, which is more than our market cap today. So a lot of room for growth from a valuation and, of course, just from production standpoint for Steppe. So that's underway. We've already started constructing the phase 2 crusher. That should be fully installed in Q2. We'll actually get the benefit of using that in phase 1, which means we can increase our crushing capacity by 3 times and maybe run some more ore through the phase 1, take out more ounces, more cash flow to grow our business. So that's underway. Camp expansion is starting soon. In the summer, we'll start earthworks. And once that final package comes in, we'll also start the long lead items, deposits and ordering all that. So really 2023 is a big year for phase 2 construction. This one is the whole setting it up, knocking off the base concretes, earthworks, camp expansion, and the long lead items. So it's not capex heavy this year, maybe 20 to 30 million US, which we already have 60 million US available to us, not counting any cash flows.
Oh, indeed. Great news for the shareholders here.
Yeah.
And you mentioned a bit earlier about your production being slowed or affected by the COVID. So are you considering you're out of the woods yet for that point of view? Now you're restarting and you get back on track on the production level?
Yes, we do think we're back on track here. What we've done is increased our supply channels to have right now probably about 4 different suppliers and countries that we can source. So we're very comfortable that we won't have the disruption. In fact, while we were waiting and we had such a delay, luckily the gold price did move. We built up a strong inventory and paid for it already last year. We actually expanded our chemical storage on site to about 400 tons. Previously, it's 200 tons. So it allows us to build up inventory on site. So we'll never have these issues in the future, we think. So that's been a huge part. COVID certainly has an impact still on travel. Had that impact with the borders and in supply chain issues globally that we're certainly not the only ones feeling that impact, but we feel like we've turned the corner now, and now the cash flow will come online and we can remove any kind of overhang or fear in the market where people thought we might have to raise equity if we had no production. Well, production comes online and we're going to build up our balance sheet from the cash flow. Second thing, obviously COVID did impact our feasibility study. So that, took about 6 months longer because for about 3 months, there was no planes leaving the country, which means we couldn't get our samples out to BC, base metal labs and Kamloops. So they were sitting there and we couldn't get them out, which means the test work was delayed for the feasibility study that came out in October. Obviously, by the time we got those samples to the lab was backed up because everyone was there. So yeah, it certainly has impacted us, but we've kept our team safe. We've continued to operate and create value for shareholders that eventually will be reflected in our share price. So that's very exciting for us to be where we are right now.
Sure. So let's just talk a bit about that magic number in the industry, that 100,000 ounce per year production in the gold industry here. So how will you be able to achieve that level, and what's sort of the timeline there for the growth path?
Yeah, sure. So right now we're at that 60,000 ounce run rate on a heap leach. Our phase 2 will consist of a flotation plant. So you're gonna have flotation circuit. So it's a different process. Obviously that additional crusher, that's a fixed crushing circuit, a tailings facility, a power upgrade. So it is a different process completely compared to what we're doing in the heap leach. The capacity will be much higher than 100,000 ounces, closer to 150,000 plus. So meaning if we increase our production profile, we don't have to increase our capex anytime to get to a higher production profile. So that's the beauty of this, as we find more ounces or convert more ounces into our mine plan. But today we're comfortably at about 1.6 million ounces in our reserves for phase 2. Previously we only had 210,000 ounces of reserves, and that was only in the oxides. We've shown the material is there. The process is different, and in fact more stable. Doesn't rely on the weather or, in fact, the reagents. The reagents aren't dependent for phase 2. And that's part of the reason why we pushed off any uses of chemicals for phase 2 until, so we don't have to rely on, the issues that we had during phase 1. So we're very comfortable we'll produce 100,000 ounces from the phase 1 mine over the next 2 years, which will generate 40 to 50 million US of free cash to fund phase 2. Now, if phase 2 does take longer, and it doesn't take 2 years, but maybe it takes 2.5 years to bring online, right? Things take longer. We'll have the luxury of having that producing phase 1 mine still going. So it should still be running in that 2024 timeframe for a couple of quarters. It means more cash and that window. So we get that, we have a cushion, thankfully, this time around. If it was our first mine, you don't have that cushion. You get squeezed. You have more costs if there are delays. Here we have our own cash flowing asset from surface to weather any storm, and again mitigate any dilution. Our management and board own about 20% of the company today. We're very mindful of dilution, so we're aligned with our investors. We don't want to unnecessarily dilute. That's not our, we're in it with our investors. So we're very mindful of our capital allocation, I guess.
Sure. Let's summarize a bit here. What should investors be looking for in terms of catalyst milestone in the next 12, 18 months here?
Oh, absolutely. So there's quite a few. In short order, I think seeing continued production and cash flow over the next few months, and that build up in those numbers from a cost basis, from a margin basis, and even our balance sheet growing, strengthening without having to pay for it, meaning no raises needed on the equity side, is huge. Further updates on the expansion, which means the debt package growing, the EPC confirmed, further work being done on long lead items, all that stuff. That's seeing the phase 2 progress. Expiration on 2 properties, so both the mining license where we are producing, still a lot of opportunity to grow this 2 million plus ounces. We think it could be 3 to 5 million ounces. Just like in Russia and China, there's larger deposits like ours that are of that scale. So we're going to continue to grow that deposit, and where the infrastructure is already there. Our second property is an undrilled license, 14,400 hectares, called the Udamhundi or UK project. That's where Erdene Resources have had a lot of success surrounding our license. That's something that investors get for free today. It's almost like an option play, and that's drill ready. And so we should have some drilling news flow from both properties also in the mix. So quite active between cash flow, expansion, and exploration on both properties. So that's really what to look for. And of course, in about 2 years' time, commissioning of that phase 2.
Okay, thank you again for your time here with us, Aneel. Not to mention, we're seeing possibly a next gold bull one here in the prize here.
Yeah, absolutely. Absolutely. Don't want to forget that.
Thank you for your time here, Aneel.
Thank you. Thank you so much.